the closing bell of the New York Stock Exchange. The Dow today finishing the day relatively flat, barely up. We're saying this is up fractionally. The S&P 500 and the NASDAQ both saw losses. The S&P 500 ended the day down just under 0.5%. The tech-heavy NASDAQ closed in the red, down 1.25%. I want to bring in George Ball, financial guru, also the chairman of the financial services firm Sanders, Morris & Harris. George, thanks for being with us.
Happy to be here, Jeff. I'm not sure what a guru is, but I sure like to be one. That'd be wonderful.
Well, yeah, you're a guru, man, because you can help us figure out what's coming next, because it's been a rough year in the markets. The way it finished today, fractionally up, that's basically par for the course this year, isn't it?
Well, the market is down nearly 20%, as measured by the S&P this year. Today, and I think this week, is going to be full of sound and fury, signifying nothing. Most traders, most investors have packed up their portfolios for the balance of the year. And I don't think that on Wednesday or Thursday, Friday, there's going to be anything of significance that happens. There's going to be a lot of looking back and a fair amount of prognosticating as to 2023. Whether that prognostication is worth anything or not, we'll find out in a year.
Reading between the lines, it sounds like you're saying these investors are saying, I give up, I'm out, I'm done with 2022, let's look ahead to 2023.
Jeff, there's an interesting phenomenon. Most years when the market is up, the last week of the year is a very busy one. Most portfolio managers and traders get paid a percentage of the profits that they make over the course of the year. With the S&P down 19%, and with the NASDAQ down 30%, there aren't many profits to protect. So a lot of people have done what I've done, as you can see from the background. They retreated to Colorado or California or some place to lick their wounds.
All right, and I'm wondering what based on what we're seeing happening in China, the Chinese-linked stocks are doing better with China now lifting these lockdowns related to COVID. But should the country fall into a mass outbreak, could these gains be short-lived?
People are speculating and trading on the Chinese markets now for two reasons. One is, all right, China is open for business again, and there's a good chance that their economy, the second largest in the world, will perform better, grow more than it has in the past totally locked down year. The second reason is a more problematic one. Is China going to take a less belligerent stance towards what I'd call capitalism in the Western world broadly? There may be some hope that that happens. So as a trade, you look for China opening up, growth to resume there. And as an investor, you think, gosh, if this big economy becomes less adversarial to the free world, that bodes well for things, including higher stock prices.
All right. Yeah, let's hope in 2023, instead of down 20%, up 20%. That would be really good. George Ball, financial guru, in his hideout someplace, probably cold. I don't know, seeing the background there. George, thanks for your time.
All right. Thank you, Jeff. Enjoyed it.